No, but Josh, I'm focused on this note today because it's from the #1 Apple analyst, the new #1, by the way, Katie Huberty, Morgan Stanley, her first price target cut from her since April of 2020. So it's been a year. It's about services. It's about multiples being compressed and why this stock, even though she is optimistic, is going to come in. Or at least she sees upside, but she's brought the price target down. What do you think?
I read it. I don't really think she's saying anything. I think from time to time, analysts have to fine-tune their estimates and maybe take into account some of the stuff they're seeing in the macroeconomy or the rest of the market and how it might affect their existing price target on a stock, which is what happened here. But her bull case is still like $217 a share, which is almost a double from its current levels. So her like base case, I guess, is like mildly not quite the same, but like there's nothing in here. They're generating trading activity on the desk. When you look at what she's really saying, Judge, she's basically saying that some of the comps for Apple's services business have seen multiple compression. That it's not an Apple issue. It has nothing. She's just saying like all the great news on how well the company is performing fundamentally might get somewhat offset by some multiple compression for other companies and services. There's nothing in there. The big picture is that 80% of their products are in a refresh cycle from within the last 12 months. They are absolutely crushing it across the board, no matter what line of business you want to look at. And I think if you're an investor and you make sales on a call like this, you really should give the money to somebody else to manage for you.
But this really, Steph, is, as Josh said, and we've had this conversation a lot, about multiples being compressed across, a fair amount of the tech space. And now taking a look at the comps, as Josh was saying. And by the way, we went to Morgan Stanley and said, well, which comps are we talking about, really, when it comes to the services business? Because it wasn't in the note and it wasn't exactly clear as to which stocks you should be comparing, whether it was apples to apples or apples to oranges. It's Netflix, it's Tencent, it's Spotify, it's Snapchat, and it's Twitter. So those are the ones we're talking about.
None of those are comps, by the way.
From a services side, she says they are, right? I thought she was talking about the FANGs. They say no. From a services standpoint, Steph, these are the ones we're talking about.
Yeah, I thought it was a pretty confusing note, quite frankly. We always like it when an analyst raises numbers, but multiples are coming down, but technology in general has been coming down because the economic growth has been actually going up, right? And rates are going up, and we're starting to see a little bit of inflation. So you had a correction in tech. Apple trades absolutely in line with the rest of tech. I would just say it's actually now 6% of my benchmark, which is huge, and everybody is there. So it doesn't take much for this thing to pull back. That being said, as Josh mentioned, the fundamentals are still strong. She is still bullish. In fact, I'm thinking I'm market weight, right? Just because I'm trying to be prudent. 6%
you're not as bullish,
of my
right?
portfolio.
You're probably the least bullish Apple person on the show today.
Yeah, I'm not as bullish because it's had a nice run. Everybody knows about the iPhone cycle. We know about services. I am encouraged that services actually continues to grow, and that's where she's raising the numbers, and that's important because it's an important part of the story. But I'm not going to put more than 6% in my portfolio when I only have 44 names, number one. However, that being said, the fact that the stock is down 13% and the S&P is up 7% since the last quarter, that's sort of kind of interesting to me, right? And we do know the services numbers are really good. They're going to have 4 quarters in a row of north of 20% growth for a company this size. So if anything, I might go a little bit the other way and get a little more bullish. Let's just see going forward. But I was sort of confused by the note overall today.
Yeah. What about you, Sarat? You own Apple as well. What do you make of this call, right? I mean, anytime the #1 rated analyst in any space makes a call, it's newsworthy, especially when it comes related to Apple, the most valuable company out there, and the fact that it is a price target reduction from 164 to 156, albeit the rating remains overweight.
I'm with Josh and Steph. I was quite confused as to the purpose of the note, but then sometimes you realize that on the sell side, you've got to get some material out. I think she's hitting on all the right points there. I think services are going to do really well. I think we're coming out of a quarter where consumers are starting to, spend more money again. The other side of the case is, hey, there are other opportunities out there, and as more money comes into our system through stimulus, and a lot was spent on Apple products, how much is the real growth rate going forward? It's not that it's not growing. It's just a question of, again, do I look at and say, are there other opportunities in the tech sector and other growth sectors that could be a little more compelling than an Apple, even though, you still want to hold the Apple?